Welcome to our presentation on IFRS 17 implementation in Asia. This major overhaul in accounting for insurance contracts, effective January 1, 2023, is transforming the industry. We'll explore its adoption across Asia, comparing it to other regions, and analyze its impacts on various insurance business lines and insurer types. Understanding IFRS 17 is crucial for enhancing transparency, comparability, and consistency in financial statements. Effective from January 1, 2023, it introduces principles-based measurement models like the contractual service margin. This report focuses on its adoption in Asia, comparing it globally and analyzing its impacts. Asia's IFRS 17 adoption landscape is mixed. While some jurisdictions align with the 2023 date, major economies like China and India defer to 2025 or 2026. Smaller markets face resource challenges. Advanced economies like Singapore adopted promptly, impacting regional comparability. Globally, IFRS 17 adoption is widespread, with over 140 jurisdictions involved. Europe leads with near-universal adoption, enhancing cross-border comparability. However, exceptions in major economies like the US and China limit uniformity. Asia's adoption rate is around 50 to 60% for key insurers. Regional adoption varies significantly. Europe shows high adoption, enhancing comparability. The Americas have medium adoption with some divergence. Africa and the Middle East show partial adoption, while Oceania aligns closely with IFRS. Asia's slower pace contrasts with Europe's efficiency. Country-specific implementation varies. China and India have deferred adoption to 2026, while Japan and Indonesia rely on local standards. The Philippines plans for 2027. These deferrals and local adaptations impact regional harmonization and comparability. Countries like Hong Kong, South Korea, and Singapore have adopted IFRS 17 as of January 1, 2023. Malaysia and Taiwan also align with this timeline. Thailand and Vietnam plan for future adoption, while strategic plans are in place for full convergence. Adoption patterns in Asia show full adopters like Hong Kong and Singapore, while countries like China and India defer due to complexity. Non-adopters like Japan rely on local GAAP. This mixed adoption creates challenges for regional comparability and cross-border operations. Key regional challenges include diverse regulatory frameworks in Asia, coordinated EU-wide implementation in Europe, and U.S. non-adoption in the Americas. These factors create varying timelines and resource constraints, impacting global harmonization and comparability. IFRS 17 impacts different business lines uniquely. Life insurance faces the most disruption due to long-term contracts, while non-life lines see moderate changes. The standard boosts transparency but increases earnings volatility, affecting operational strategies across sectors. Business line impacts vary under IFRS 17. Life insurance experiences high volatility, while non-life sees medium disruption. Property and casualty lines face changes in cash flow discounting and risk adjustments. These shifts enhance comparability but add complexity. Life insurance faces the highest impact under IFRS 17. Key changes include the introduction of the contractual service margin and discounting of cash flows. These adjustments lead to significant volatility in profit and loss statements, requiring substantial system modifications. Non-life insurance experiences moderate impacts. Property insurance benefits from enhanced comparability, while casualty lines face significant changes in reserve estimates. General P&C sees less disruption, focusing on operational efficiency rather than product redesign. Impacts on insurers vary by size and focus. Large insurers face higher costs but gain from comparability, while small insurers struggle with implementation burdens. Reinsurers deal with added volatility. The standards costs and benefits differ significantly across the ecosystem. Insurer type impacts under IFRS 17 include complex portfolio remeasurement for large insurers and proportional allocation challenges for small ones. Life insurers face earnings fluctuations, while reinsurers deal with volatility from remote risks. Opportunities for improved risk management exist. Large insurers face complex transitions with higher compliance costs but benefit from economies of scale. Small insurers struggle with resource constraints and high relative costs. Despite challenges, large insurers gain improved investor appeal and risk management capabilities. Reinsurers face unique challenges under IFRS 17, including economic valuation of complex contracts and earnings volatility from remote risks. Loss recovery components add complexity, while reinsurance mismatches create reporting challenges. Opportunities for better capital allocation exist. The implementation timeline for IFRS 17 began in 2023, with full adoption in several Asian countries. By 2026, major markets like China and India will align, increasing regional comparability. By 2027, full regional maturity is expected, with potential global convergence. In conclusion, IFRS 17's implementation in Asia is uneven, with key markets deferring adoption. Impacts vary across business lines, with life insurance facing profound changes. Large insurers benefit from scale, while future convergence could enhance global parity and financial insights. Everbright Actuarial Consulting offers expert support for IFRS 17 implementation. Based in Hong Kong, they provide comprehensive actuarial services, pricing and risk management, and tailored solutions for various insurance sectors. Visit their website to explore how they can support your IFRS journey.